Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Overall, the absolute worst thing that any one of us can do, and I could be guilty of this any given day. I have to constantly watch myself. We've got things at Big Trends where we watch each other, because this can happen to anybody. It's not following your trading plan. Basically, you can read some of this stuff, but if you don't follow it, the absolute worst is if you don't follow your trading plan and then something goes good, i.e. you make a lot of money from making some off the cuff trade decision based on something you read on a forum, and it was 100% unsystematic and 100% subjective. You're going to continue to do that, and as most veteran traders will tell you, is that you've got to have, you don't see people on the trading floors down there winging it left and right. They've got a strategy. They stick to it. They review it. Now, it's easier for them. It's easier for me, typically, because we do it for a living. But for you, if it's something that you do on your own, you, again, want to treat it like a business. And you certainly don't get into that mind trap of, well, I was trading last week, and I was just looking at something, and it was good. I don't particularly care if you are going to be using fundamentals only and moving averages. That's a pretty basic system. But I'd like you to have it written down. I'd also be willing to tell you that you're probably going to get a ton of signals if you're looking at, every optionable stock, and your system's just moving averages. But so you might want to, create a focus list of, stocks that you like or ETFs that you like. Again, going back to some of the ETFs I like, I don't trade. I think it's funny. I haven't gotten a trade on leverage or a question on leverage ETFs in quite a bit of time. They were so popular back in 2008 because of the volatility, but it's been quite challenging for individuals to find a ton of success, especially consistent success with them, because we've had such a long period of time of declining volatility. Now, few and far between when we get that pullback like we got today. It's great. It's been few and far between, though. So again, going back to that consistency. I know in 2008, the system I used on leverage ETFs was a 15-minute chart backed up by an hourly chart, and it was using acceleration bands and %R. So it was another technical-based system. I only looked at about 5 or 10 of them at the time. Right now, I look at about 12, just keeping an eye on them. But again, I haven't made a trade on a leverage ETF in several months. At any rate, I can continue on here. Well, I hope you guys can still hear me here. It says that we're still connected, but Katrina, I'm not sure. It won't let me go any more forward on the slides.
Well, that's weird. Yeah, no, we can hear you just fine. Let me see if I'm able to click through. Oh, there you go.
There it goes. Good stuff.
Great.
Anyway, so to talk about my trading profile, and really I've kind of answered a lot of this, but to give you a little bit more detail on exactly what it is that I use. Again, I go back to a weekly, daily, and hourly system. Each one has different. The hourly and weekly are based on %R, different levels. It's interesting with ETFs. Going back to talking about it, my weekly system, I don't trade any short on weeklies. It's really, if you go back over the last 20, 25 years, and you will not find, the market was only going down the minority of times. So what I've done for my longer-term weekly, more active investor portfolio is that we do look for short-term bear opportunities, but we do it with inverse ETFs. So they're not leveraged, so you don't have to be concerned so much for the basically like I think they call it the logarithmic return problem, where basically if you've got, because they're looking for a daily goal of 2 or 3 or however many times the performance, that it gets further away from that on multiple days. But you don't have to worry about that inverse. So like the inverse of the S&P 500 would be ticker symbol SH. And as S&P went down 1%, it would go up 1%. So basically it's a long-only portfolio. I don't have to be worried about margin or anything like that on a longer-term portfolio. It's just simply buying. For my daily, again, I look at directional trades. I do options on straight put or call buys, typically in the money, or we do a debit spread where we can basically still play the direction, reduce our overall initial investment. It sounds great, but you do reduce you do have a quote max gain you can get to. And that's, a good example of that is earlier this year we had a trade on SLV, and for whatever reason we just didn't roll at the time. Moby and I, we talk about it, we're like, well, we just don't understand why we didn't roll it, which we've now reviewed that process of we now need to roll these options. We had a max gain on an SLV directional position, which is silver, of like 86%. We reached it within just about a week or two because SLV was up 12% in like 2 weeks. It was great, perfect trade. Now, if we just would have done the straight call on that, it would have been up over the holding period that we were in. It would have been up nearly 200%. So we missed out on some of that, but we also, if we were wrong, would have been much better off too. At any rate, no one's perfect, including myself. So just to give you some insight on where we continually improve is, how do we really systematize when we decide to roll an option, right? So if we're getting close to expiration and the signal is still good, do we get in the identical position with the next month? So on and so forth. I've got 32 ETFs right now that I focus on, and that's anywhere from, again, sector ETFs here within the U.S., international ETFs like FXI, EWZ, Brazil and China, RSX, which is Russia, I have on the list, but it's at times it's liquid enough, but it's not all that much. I think I actually removed it from the list. But you got like GDX, which is gold miners, and retail, obviously every sector, and then you've got different currency ETFs. So the great thing about ETFs is that you can get access to just about anything in the world, which is obviously something that none of us had access to even in like the 90s. I mean, ETFs came out. I think the first ETF was the SPY in 1993, but that they were just for the major indexes. Well, now we can have pretty much access to anything, and in just about all cases, cheaper than a competing mutual fund and more diversified and risk-averse than a stock. So you're basically mitigating yourself against those business-specific risks that you would find in an individual stock, just stuff like that. But I focus on 10 leverage ETFs, just primarily on an hourly chart, again, or 15-minute or hourly chart. Again, it's been a little less. At this point, I really have disengaged that system more or less because I haven't been finding it to work for quite a long time, and I'm not about ready to make a knee-jerk reaction on a day like today that we were down 100 points on the Dow, 115, and reinstate basically a 2008 style system that does very well when the market moves very fast, and I can make profits off of it, but consistently, perhaps not. Certainly doesn't look that way. So it's not something that I've basically disengaged from that system. But I've got it to re-engage, and we keep an eye on it and monitor it to make sure that if it's going to work, then we can get it out there. Again, you've heard me say in the money options, 2-3 months out typically from expiration month, and about 4 to 8 trades per month. So it kind of gives you an inside look on And again, short trades are typically 1 to 7 days. Long trades are 7 to 21 days. Knowing all these stats really gives you the good expectations to know when you're actually in the trade. So that's helpful. Talking about all those questions about position sizes, and I've kind of said this throughout, but, you know, these are some of the same questions, just put in a different way. You know, obviously, I would recommend minimum. It depends on what you're getting started in. And if you get started with less than $5,000, you're going to be forced to potentially make too big of trades that are 50% of your account value, or you'll get into a very hyper risky out of the money situation when you're buying options. But you know, many people don't have to worry about that. That's great. Just want to give you that threshold in case you are starting out. I would recommend buying in the money options. If you're going to sell options, obviously you want to do the opposite, right? If you're trying to create a more conservative options portfolio, if you're looking for the very high risk, very fast moving, potentially account devastating, you know, you really want to know what you're doing. And I've just seen too many people really just kind of squander a lot of your capital when they didn't need to. When I run the portfolio, I don't typically publish price targets on our options trades. I just don't want, you know, we manage our portfolios for our clients, so they don't have to worry about stuff like that. A lot of times in videos, I will something that's not so tangible and out there in an email. But price targets are fluid to me. You know, you can clearly see a support or a resistance area, but many times those are just not the, you know, let's say, for example, something's reaching all-time highs. Where's the resistance? There is none, right? Well, that's where I go back to using the indicators, and they give me a constant update on a relative key level. So I always look at key levels, and if those key levels are, quote, violated, then I just get out, no questions asked. And this is actually talking about auto trading, but we don't have to be worried about that too much. But I don't use stops typically because I'm watching our stuff on a regular basis. And then finally, how much capital do you allocate for each trade? Again, it's, you know, our average for internal here at Big Trends is about $5,000 per trade. But for you, again, you just want to always go back to that. Keep it a percent. If you really got a low end of amount of account, you might want to start off with a hard number of contracts. I would say 2. That way, if you reach 100% gain, let's say, you can take off half, so you've got basically a free trade. Yeah, I mean, you would definitely want to stick with a percent as opposed to how much percent capital. And of course, you can always go there and take a look at the bigtrends.com/ISE. Now, the last thing I want to talk about, I want to bring Katrina back in on this to help me really give this the best resource and overview that I can on this. These are the free ETF trade alerts that...
Yeah, it looks like there's an issue with the slide. For whatever reason, it looks like all of the text that we have up there is not showing up. That's technology. Oh, and there it is. Never mind.
There it is. That's why I needed help. I was like, there's nothing here going with it. But I'll let you we can kind of talk about it if you like and where they can go to get this.
Sure thing, yeah. Well, there are a lot of resources available if you're interested in ISEs, indexes, and their respective ETFs. So all the URLs are up there for you guys to sort of check out. One thing we did want to make sure everyone knew about is that we have free ETF trade alerts. And these are actually really useful for people who are sort of new to the products, for investors who are sort of looking to get their feet wet with trading our ETF products but aren't entirely sure and need, you know, trading ideas and that sort of thing. So this is provided by a third-party research provider, and these go out fairly regularly. So make sure to take advantage and sign up. They're free. You kind of can't beat that. So yeah, and you'll be able to check back. We have podcasts available of all of our various webinars. You're able to sort of check our webinar schedule on an ongoing basis. We usually try and plan our webinars out at least a couple months in advance, so you're able to sort of check back routinely and see what topics we have available. But it's a lot of educational content that we strive to provide for our users, so make sure to take advantage.
Yeah, and I just want to say real quick, Katrina, to everyone out there, I hope that I was able to help you at least advance a little bit today as a trader. We covered a lot of things that were very basic, but the end-all, be-all thing here is to really get this stuff written down on paper to make yourself a better trader and be more systematic, objective, and less emotional. Make your life much easier if you would do that. But I'll say just in the closing here, if you do want the PDF of these slides, I'd be more than happy to send them to you. Just send me an email at andrew@bigtrends.com. That's ANDREW @bigtrends.com, and I'll be more than happy just to reply back with those. Also want to say thanks for everyone out there. Thanks for the kudos. But also remember the bigtrends.com/ISE for the Big Trends Coaching Toolkit, which is provided gratis to everyone here today. Other than that, I am 100% finished and looking forward to a great rest of the trading week for myself and for you guys out there. Katrina, do you have anything else to add?
No, we just wanted to thank you for sharing with us today. Thanks to all of you guys for joining us. If you do have any questions, comments, feedback, anything like that, make sure to just send us an email at webinars@ise.com. We do hope to see you guys back next week. Thanks.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.